Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone for supporting the channel, all the viewers, all the subscribers. Immensely appreciate the support. For today's video, just want to respond to a number of viewers that commented on my last video, 3-in-1 stock trade. If you guys have not taken a look at that video, please do so. In that particular video, I go through a very unique way of coupling a dividend capture with a swing trade as well as an options contract. So a 3-in-1 type of trade in which you can make money on each of those individual portions of that trade. Again, a dividend capture coupled with a swing trade, coupled with an options contract. Quite a unique strategy. Not quite sure if this is going to work out or not. Decided to test it out again on that last video with GE and IRM. And in response to that, a number of viewers were wondering exactly what the strategy was. So I thought I'd kind of detail that again with IRM, as well as talking about some of the risks involved with options trading. If you guys haven't taken a look at my other videos regarding options trading, please do so as well. It gets much more complex than simply buying and selling an individual security. So please take a look at that, especially the ones called covered calls. That's essentially the type of options contract utilized in this 3-in-1 stock trade. So we take a look at the options I have on the portfolio currently. You can see there are a number of different positions I have. I want to highlight one that I talked about yesterday, IRM. If we take a look at the stock here, you see I have an options contract. I sold off a contract. You can see IRM, $35 call, $6.15. So on Friday, this will expire. You can see a -1 contract and that upper left-hand box there. So that essentially means that I sold off a contract. Take a look at the average credit, 10 cents per share. Each contract is 100 shares. So you can see on the history portion, I had a dividend premium, a dividend payment, or a cash payment to the portfolio of $10. And if we take a look at the stock, you'll see it's currently trading for $35 right at the stock, or excuse me, right at the strike price of that particular contract that I sold off. And the history, just to show you guys exactly what was done. Again, I detailed this on that prior video as well. You can see a market buy there, June 11th, 2018. 34.53. If we take a look at the details, you can see that this was for 100 shares at $34.53 per share. Total equity value $34.53. Again, the idea was to jump into this particular position with at least 100 shares. You need 100 shares per contract. Sell off a contract. You can see again the cash payment in the middle there, $35 call sell, $6.15. So I've received that premium. And then the idea would be to capture the dividend. This stock has an ex-dividend date on the 14th. So I'll get the dividend payment as well. If we go to history, we'll see the last dividend payment. And the dividend payment, I think, for this particular quarter will be a little bit higher. I think it's 59 cents per share. You can see here, last dividend payment, 100 shares, $58.75. So total dividend payment of $58.75. So I'll essentially be getting $59 with the dividend increase on this next payment for just this trade alone. It'll be 59 times 2 for the entire position, but for the 3-in-1 stock trade, it will be $59. So you're essentially coupling that $59 swing trade with that $10 call sell options premium in the middle there. And then if I do sell off this stock at the strike price of $35, I'll make another $47 with that particular swing trade as well. So if you add all of that up, I think that's right at $116 for that trade. And a lot of you guys were commenting on what are the risks involved with this type of trade. So the risk would be if the stock starts trending down. So instead of trending up to the strike price, it starts trending down, so you could potentially lose some money on a swing trade. You'll still get the options premium. You'll still get that dividend payment for those parts of the trade. The only thing you would not be able to do is the swing trade. You would not be able to exit the position unless you wanted to exit at a loss. So that is the main risk behind this type of strategy, is that if the stock does start trending back, you may lose some money on that particular trade. But again, I only employ these types of trades on stock that I'm more than comfortable holding for the longer term. So I really don't think that is a big risk in this type of trading. You're essentially getting paid to jump into a position that you would not mind holding for the longer term, picking up the dividend over the longer term, and then when the stock price does trend up in the future, at least that's what you hope, by jumping into a longer term position, then you can sell off that particular stock, exit the position with a positive swing trade. The other risk is that let's say, for example, Iron Mountain here went up to $37. I still can only sell this off for $35. So there is some upside that you may potentially lose with your trade if the stock does start running up before your strike price. You're only going to be able to sell it off for that options contract price. So you can essentially limit that swing trade. But again, you will still get that options premium. You'll still get the dividend capture. The only thing that you will lose is if the stock does trend up quite a bit, you'll lose some upside potential on the stock. So those are the main risks. If the stock starts trending back, you may have to hold the stock longer term. Again, you only want to do the strategy in a stock you're more than comfortable holding for the longer term. And if the stock price does start jumping up quite considerably, you're only going to be able to sell that stock off on the strike price of the options contract. So you could potentially limit some of your upside potential with the trade. So those are really the only two risks with this type of strategy. Again, this type of strategy will also have a little bit more tax exposure as well. So please factor that into the overall profit. So for this trade here, I will get $116, but I will lose a portion of that in taxes. The idea is that I will repeat this over and over. So the number of times I'm able to do this will outstrip or outpace the losses that I get with increased tax exposure. At least that's the strategy. That's the hope anyway. Again, this is not a perfect strategy. There are definitely some negatives with it, but something interesting to try. Wanted to try out this 3-in-1 type of trading. Let me know, again, if you guys have tried any of this in the past, and what stocks do you use? Iron Mountain here is not the best stock. There are not a lot of different options contracts that you can sell off. Take a look at the stock here. I detailed this on my prior video as well. You can see that there are only 4 positions here. A lot of other stocks like AMD, for example, would have 15, 20 different dates, expiration dates, and within each date there are a number of prices, much more than Iron Mountain has available here. So there are better stocks for this with higher options premiums, as well as more options for each particular expiration date, as well as number of expiration dates. But again, let me know what you guys are doing with this strategy, if you guys have tried it at all in the past. Again, you may limit some upside potential if the stock does start trending back. You want to have a stock that you're more than comfortable holding for the longer term. And again, you will have increased tax exposure with this type of trading. But not to make the video too long, I'll kind of end it there. Again, let me know if you guys are doing this type of video and which stocks are you doing it with. Really interested to know if this is working out for you or not. If you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. If you guys have any great video ideas as well, let me know. Always looking for new topics to read up on and research. So kind of with that, I'll end the video, and we'll see you guys next time.